is a new record-setting insurance policy that was bought by a tech billionaire. The price, a whopping $201 million.
That's what I'm trying to figure out, Dovey. It's Brian Sullivan. I mean, why, if you're that rich, why would you need a life insurance policy of $201 million? You've clearly got billions of dollars anyway. I'm trying to understand the point of the policy.
The dumbest. I was like the dumbest person ever. I used to just spend money on everything. Man, please.
Yeah.
Please. I'm going to open up an insurance, put $2-3 million in my insurance, and borrow from that and put it back in. I never lose my money, ever.
You invest in whole life insurance. What is life insurance? Do you use it for your real estate investments? Do you use it in business? Do you recommend it? Is it good? Is it bad? Listen, I hear you. Today I'm making a video. I'm not just going to tell you what whole life insurance is. I'm going to show you how I've used it the last 15 years to make a lot of money. There's things that I hate about life insurance, and then there's a rare type that I really love. For me, the bigger question is, why aren't more people becoming financially free, and why don't they know about what we're talking about right now here on life insurance? And frankly, if you want to understand whole life insurance and how people, smart people, the rich are using it to actually make money, like the idea that I put my money here, pull it out and earn also over here, pull it out, or bottom line is if I'm earning money in multiple places on the same dollar, I'm feeling like a financial genius.
Yeah, you know, this is, by the way, this is what banks do. It's called Tier 1 capital. As they loan money out to you over and over again, they're making that guarantee rate of return. So if you get the right kind of life insurance.
So I've been leveraging these kind of policies for years. And I've been basically dumping money into policies. And then as that money is built up, I'm pulling them out and using them for doing things like this. In fact, guys, I put my money in these policies so that I become the bank on pulling that money out to buy other assets. And now my money is earning in two places at once.
About the infinite banking concept. Have you heard about this concept? It is super powerful, super cool. I've been doing it for over 10 years myself, and it basically turns you into the banker in your own life, so that instead of having to borrow money from a bank, you can borrow money from yourself. Super cool, and I'm gonna tell you all about it. Okay, so to understand infinite banking and what's called the infinite banking concept, there's a few basic principles that we kind of gotta walk through. First of all, the advantages of infinite banking are really, there's two primary advantages. One is it gives you the ability to borrow money at interest rates typically way better than you would get for any sort of unsecured or uncollateralized loan where you didn't have to put up your house or your car to borrow the money. Usually you can get infinite banking concept type loans for around 4 or 5% interest rates. So obviously the second benefit is that you don't have to put up your house or your car as collateral. In fact, these loans are collateralized by the actual death benefit of life insurance. And so to understand infinite banking, you have to know a little bit about a type of life insurance called whole life insurance. And I'm just telling you about a really cool concept that I was exposed to around a decade ago, a little over a decade ago, that I've been using and to very cool effect in my own life. But
there's other benefits from cutting out the bank and doing exactly what they do with their reserves. You can easily outperform the measly interest paid by the banks. The way you do this, you can save money in a permanent, overfunded whole life insurance product and coordinate those savings with all of your money-making decisions. You can use your own money instead of the bank's money. You can set up a loan scenario where you're in control of your payback periods and you can use your cash.
This is what I have invested my money in this year. First, we have a whole life insurance policy, high cash value up front. You have to be really careful about the people that you work with this because they can totally screw you. And they are incentivized to screw you, and most insurance agents will not want to hear that. But the commission structure that they have for these policies is insane. It destroys the cash value that you earn from these things. So if you decide to set up a whole cash value, whatever insurance policy, one, go with the big four. So that's Guardian, New York Life, Northwestern Mutual, and UMass or Mass Mutual, excuse me. So those are the big four. They've been all around for over 100 years. You know, New York Life's been around for 183 years. They predate the tax code. The reason I did that is because it basically creates a bank account for you that you can use. You obviously pay costs in the beginning, but you can basically loan against the cash value of the insurance, and the cash flow it's guaranteed growth at about 4% a year. And so if you just compare that to a traditional bank account where you're losing money, this at least covers for inflation, right? And so that allows you to at least park the money in a way that's not devaluing itself. And if you do see opportunities, you can loan against it and invest in those things. So that's the first thing that we did. If you ever do one of those, you should be able to break even by year 3 to 5 at most. If it's designed properly, they'll tell you that no, it's gonna sacrifice the long term blah 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 of the thing. I think that's horseshit when you compare it to the present day cash, like the value of having your money available to co-invest at the same time it's not even an argument in my opinion. It's also how corporations and banks and Fortune 500 companies structure it. So look into Coley and Boley, which is corporate-owned life insurance and bank-owned life insurance, if you want to see how they structure it, because they know what they're doing. And so that is how we structured it. So that's number one.
I made this video to demonstrate, to show you that the rich sees and use life insurance in a very different way. See, majority of the people, when they purchase life insurance, they purchase it for the death benefit, while the rich, they purchase it for the living. See, they'll use these policies as a financial tool to acquire more assets. Now, the cool thing about this is not exclusive to just the rich. It's available to everyone. So if you're looking for life insurance and want to copy and mimic what the banks and the wealthy is doing, you want the same life insurance, my opinion, you should choose the 4 major mutual life insurance company. The ones that I recommend are Mass Mutual, Guardian, New York Life, and Northwestern Mutual. And the second part is policy design. You have to find the correct agent who truly knows how to design these policies. So I hope that helps. Till next time.